Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin, we're going to be looking at our Elliott wave counts, and we're also going to be doing some basic technical analysis. Now just in case you've been hiding under a rock or hidden away in a cave for the last week or so, I have to inform you that Bitcoin has made a new all-time high. Strangely enough though, I think if you're watching this video you're going to be already aware of this fact. Now we have pulled back a little bit from the high. It looks a bit toppy. We may have completed a wave of a larger degree up here before we start a more sustained pullback before once again heading higher, but we may also have further to push. So without further ado, let's dig into the short-term count here that we've been following, our bullish count for a few weeks now since we saw this pivot, and we'll try and make sense of it. So, quick update. We've been saying 1, 2, 3, 4, 5 into a 1. A, B, C into a 2, and now we're coming up into an intermediate 3 of our primary 5. Now so far I think we're working at minor degree, so minute here 1, 2, 3, 4, this could be minor 1, minute 5, and now we could be about to break all of this trend and come down into a 2. But it's also possible we're going to thrust up a little higher into a minor 1 before coming down into that 2. So either way, sooner or later, an opportunity to add to your position if you're long will be coming along. So let's just look at the shorter term count. Now, as I've expressed in previous videos, I don't obsess over trading this noise because it's just too volatile. There's too many short-term pivots. I want to get into this kind of action. Okay, 5 waves up, 3 waves back, reaction on a smaller time frame, and off we go. Okay, that's what we teach at the Patreon. Or of course on the larger scale we could do it again. We get a 3 wave move back, a reaction, and off we go. You know, so that's the kind of pivots I'm looking for. I'm not particularly interested in getting stuck in amongst all this. So if I want to add and accumulate more, then I'll be waiting for a bigger move and a bigger pullback to do so. But I'm quite happy just hodling after accumulating over the last few months, to be absolutely honest, and that's what I intend to keep doing. So looking through the short term here, minute 1, double combination into 2, and then we go 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5 to work our way through this big extension from minute to minuet to sub-minuet to micro, all the way up into minute 3, minuet 5, minute 3 here, into minute 4. This could be the completion of minute 5. Now, big, long, impressive extension in the 3, the most typical wave to extend, that makes sense, and wave 5, not quite, but roughly of similar size to wave 1. Okay, which is quite normal as well. So we could be done here. There's also the possibility that we're going to push a little higher, and this is a 1-2 at minute degree, and we're going to push up into a wave 5 to find minor 1 up here before we get a bigger pullback. So pretty simply, we're just going to be looking for, did I put, yeah, this level here. So what shall we say? We'll click on these two, say break of trend, should we call that? Because that's what it would result in. Okay, so essentially what I'm saying is if this shorter term count, and this is a guess because when we're into these small time frames here it's very difficult until we get a larger pivot to figure out where we are. So the possibility that this is a 1-2. Now the 1 can never come back beyond, oh sorry, the 2 can never come back beyond where the 1 began. So that's down here at 59083 spot 18. So a move down below this point would take out this pivot here, and that would cancel out this section of the count. This could not be correct at that point. Not the way I've drawn it anyway, with this being a 1-2, that could not be correct at that point. So it would also break trend, I think, if we came down here, and that would much more strongly support that this was the 5 and the 1. Okay? So that's essentially all we're looking for at the moment. We're either going to push on until we find a larger wave degree and have a more significant correction breaking a larger trend, or we've topped and we're going to do it now. This is essentially what I think are the two options here. Both are opportunities, obviously, as the break of trend will be obvious. And then it's a case of waiting for a reaction and then entering a safe place to put a stop if you're not already in. But or if you're just adding to the trade, the same theory applies, of course, because there is a bearish count out there which we will look at in a little while, which could catch everybody out. It's always a possibility. So let's now look at some geometry to support this idea. So we've got our break of trend here that we're going to keep an eye on. Take note of that or rewatch the video. And to emphasize this, we're going to use our most recent pitchfork, which is minute 1, 2 of minor 1, so on and so forth. And that's this one here. We're going to shift the chart into log scale here because I think it's just a better fit for the pitchfork. Plus also, since this is all minute wave degree, we're assuming after a larger pivot into a minor, so intermediate into minor, to have had a significant move at a relatively small wave degree. You know, we're up here at 70% in this move alone. So sufficient skew, I think, over the short term of this wave degree to apply log scale, but it's still holding and still functioning in linear scale. So we could look at it either way and be happy. We seem to be pushing further and further above this outer bound in linear scale. It seems to be a nicer fit here in log, but we should observe both at this point. You might as well, because you would get double confirmation of the trend breaking either way. So. But that's essentially what you're looking for. If this is going to be an A into a B into a C, some kind of move like this, then a break of the outward trend here would be achieved in both conditions, with a retest possibly before heading lower. And then this would be a 1, and this would be a 2. And then we'd be looking for some kind of typical retracement for a wave 2. So if I'm just going to yank this down to here for a moment, and we'll just change the settings on this to be the golden ratio and 50. So there you go, I put it at 50, but we could come down to 38.2, could be a shallow wave 2, but typical to find the 50, very typical to find the 50, or perhaps the 61.8. We've got some volume down here which could potentially support it. Big chunk of it down here, that would be a very deep 2. That would be unexpected considering the size of this pivot here, but it is still possible. So a break of trend, reversal conditions in momentum we will look for in our basic analysis as well, a break of trend and a bearish move down 535 and a zigzag perhaps could be an alternate pattern to that, however, but a 50% pullback from here would be expected if we've topped. And of course we can look to break this pivot if we have topped. If we haven't and we've done a 1 and a 2, we will continue to push higher from here, once again tracking along this pitchfork most likely, and still plenty of room looking at it in log scale here to continue to stay within this thing while making some pretty significant gains. Okay, so that's how I see things for our primary count in the short term. Just looking for a reversal, just looking for a break of trend, and that would likely signify the completion of a larger wave degree. Now there is an alternate count to look at, which we've had on the cards for quite a while now. Bullish. This is also bullish, however. Don't need that anymore. And this is the idea that rather than this being 1, 2 into an expanding flat, 3, 4 here, and then into 5 to complete a wave 1 into a 2. Instead, we've just gone 1, 2, 3, 4, and now we're working on the 5 into an intermediate 1. So over the long term, this is actually more bullish because it shifts our intermediate 1 position to here, bracketed 1, higher up, which means we would now get a more sustained, aggressive pullback for a 2 into an intermediate 2, and then rather than beginning the 3 here, we'd be beginning the 3 here with a greater extension to add on to it, since this is a greater gain here, pushing the 1618 target higher. Now it doesn't have to be that deep if this were to be correct, but 50 to 61.8% would be the norm. So this is an alternate bullish count, which would give those who've missed this rally a second bite of the cherry. But I have to be honest, I think this is less likely. I think the other count is more likely. Okay, so but that doesn't mean I'm right, of course. So there's your bullish counts. Now we do have a super bullish count, which we'll look at near the end of the video, just because I introduced the idea a while ago, and I'm not saying it's likely correct, I'm just saying it's something we should consider. Now yeah, that's the pitchfork for R1 and R2. So as you can see, we're still holding this pitchfork. This is based off of the primary count. Let's just bring that back up. You can see that we're getting close to the top of this thing. So if we were to actually continue to find room inside of this pitchfork, we're really starting to stretch things now, because at intermediate degree we would expect to see future intermediate degree somewhat contained in this pitchfork. Now I'm perfectly happy to accept the throw over in the 3. Okay, because if we're going to get overly bullish, we're going to do it in the 3rd wave. But there's still plenty of room. So let's say we were to push up into an overthrow now, let's say to here, and then we have a more sustained pull back into that 2, and then we start to work in another 5 waves higher. We can still maintain this and get above 100k. It's just a matter of, it's just how long it's going to take. Is this final quarterly rally going to push up into Christmas like we've seen before, or is it going to extend out into next year, which gives us more time? So that'd be interesting to see if that occurs. So this is the pitchfork, which essentially goes along with this pivot. Okay, and the one we're watching on the short term is this one. Okay, you're looking to see that break at some point to confirm a completion of larger wave degree. So we've done enough bull talk now. I think it's only fair that we give the bearish count its due and consider the possibility. Okay, so the bearish case is new all-time high was there to bring in new liquidity. As I've said before and covered in previous videos, and have mentioned with my trading system, the standard trade setup that we teach on the Patreon, the reason why you don't buy a breakout. Now some people do, fine, but in my opinion, over the long term, if you look time and time again, you don't want to buy breakouts. Here's a breakout, here's a breakout, okay? Here's a retracement, good idea. Here's a retracement, good idea. We don't want to buy breakouts, we want to buy retracements. We Elliott wave traders, we want to be buying discounted prices, not overpriced prices. So once again, here's a breakout of the long-term high. Here's a little pullback. Now we could push higher, but sooner or later we're going to come back to correct a larger trend. This will be the next opportunity, not this. Not this. Okay, so these kind of bearish patterns we're about to consider now, these are designed, these expanding wave Bs inside of an expanding flat or a running flat, they're designed to trap liquidity at the top. The less experienced, more novice traders who are more prone to giving into their emotions, we're all human beings, we've all done it, I'm not superior in any way, I've been there, done that, just pointing out the habits of more novice, inexperienced traders is to chase momentum, and the breach of all time highs can often be misinterpreted as a bullish signal, and then it can be trapping people right up here, providing liquidity for the sellers to now get out of the market over a nice downward move, taking their profits and chasing and running long stops on the way down. Obviously, for those people out there who are trading leverage, nothing easier to do really once the market breaks that kind of trend and momentum shifts is just run the stops, and that's essentially what the algos will be doing and the bigger boys will be doing. So in this circumstance, we've gone going back to our initial pivot here, we've gone A, B, C, A. This is 5 waves in a C. Okay, so this would be A, B, C, using the same expanding pivot that we've used for the bullish count. This is up for interpretation, because I've seen people say this is a 3 wave pivot, okay, here, and that this is an expanding B wave of an A, B, and then 5 waves, 1, 2, 3, 4, 5, into a C of a greater B at intermediate degree. Right, as I look at it, that might be prettier. That might be prettier. What do I mean by that? This now looks more like a 3 wave move rather than a 5 wave move if you're going to entertain that idea. So you go A, B, C. A to here instead of here. Then you go A, B, C to B in the same place. And then you go 1, 2, 3, 4, 5, C. 5 waves in the C. 3, 3, 5, expanding flat. Okay, and that would bring price down below where this A completed back here. If it's an expanding flat, if it's a running flat, it could come and settle itself on the 61.8 or the 50 or the 78.6 and finish before these lows, and we could still have a 3, 3, 5 into a running flat, not making a new low, pushing higher. That's a possibility. Also, okay, so that is basically the bearish count, and when we reverse, we'll be looking for a break of these larger trends. So we've got this trend here, right? This is the one we're expecting to break down into a 1, 2 on the bullish count. Then we've got this pivot here. This is our proposed intermediate 1, 2. Okay, so then the relation of the pullback from this pivot, we'd have to start considering how extreme it's becoming. Then we've got our longer term trend, okay, which is based off of this pivot. So if that were to break, then you've got to be bearish. I think at that point you've got to be more bearish. You've got to be considering that either one of two things is happening at that point. Either we did go 1, 2, 3, 4, 5, and this is a 1, and therefore this trend here is going to break into a 2, and then we'll go higher. That's option 1. If it's not the bearish case here, obviously. It's either this or that alternative bullish case. The idea of this being a 1, 2, well, we can't come back beyond where this 1 began, because if this is a 1 and a 2, we can't take out these lows here. And I mean, I've expressed that clearly in previous videos multiple times. Ever since I saw this correction and bounce, I've been saying for as long as these lows hold, I'm bullish. If these lows were to break, yeah, that's bad news. Because it's either the bullish scenario of going deeper in a 1 into a 2, or it's this, and we're coming down in 5 waves. Okay, so a lot of damage has got to be done to the chart yet before we lose faith in the bullish case. An awful lot of technical damage has got to be done. So I don't think it's worth getting carried away with the bearish idea yet. We've got a lot of damage to do on the way down before we can start to become confident in it, but we'll look for signs at the end of the week. We'll look for a bearish or bullish close for the weekly candle, see if this current trend breaks, see how our momentum looks in the RSI and the MACD, see what evidence there is to suggest that we're seeing an impulsive move from the high, and yada 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 yada. Okay, so that's your bearish case. Always have to give it its due. We must always have an open mind, because we don't want to be caught out. If we see something break our bias, we have to have an alternate plan to fall back on. Right, so before we do our basic technical analysis and wrap up the video, I was about to say something different then, and wrap up the video, we're going to consider the Uber bullish count for a moment, which I introduced a while back. Now, I spoke about the Uber bullish idea on the Ethereum video I did earlier in the week. So, what's got me thinking about this more and more as time's gone on, rather than concerning ourselves with the cycle wave degree and the super cycle wave degree of that, just working on the pivot from the 1 to a primary degree, which is the same. Okay, so in our primary count, we're saying 1, 2, primary degree, 3, 4, a primary degree, now coming into a 5. Okay, well, what if this isn't the same wave degree? This is a big ass correction. This is significantly smaller. Now, it doesn't look that way in linear scale. Okay, so just remember that. But when we're looking at it in log to account for the skew in price, it may not be related. So as I pointed out in the previous Ethereum video, you got this dock off correction, and then you got one that's a bit smaller, and then you got one that's a bit smaller still, and then one that's smaller still. So although this seems like too bullish to believe in many ways, it could be a gigantic cycle wave 3. I'm not going to spell cycle out on the screen, for God's sake, it'd take me forever. It could be a gigantic cycle wave 3, and we're going 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 5, so on and so forth, as we would see in a wave 3 extension, which is the most typical extension. You know, the only thing I would point out is it gets even better than that, because all the way back here there's a super cycle degree wave. So it'd actually be 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5. 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5. No idea how long that would take if this is correct, and no idea what the price would reach if that's correct. I mean, millions. It'd have to be to have enough room to complete. It'd have to be in the millions. So this is still moon boy talk, and I know that some of you are like, and I don't blame you for dismissing it. It sounds crazy, but I'm just curious. Well, there's different sides of these wave degrees. Are we trying to force this into this wave degree because we want 5 waves up, right? Because then once we get that 5 waves up, this can be our cycle 3, and then we can get that big 90, 80, 90% sell off and reaccumulate for the next half, next 2 years, 5 years, whatever. But what if this is just a 1-2? So rather than just leave it there, let's consider this idea for a moment, using another pitchfork to support the count and see how it looks. So we've got that uber ball pitchfork. Now this is the idea that this buys us a lot more room. Just an inordinate, is that a word? Larger space to trade within inside of this intermediate 3, because we can now push with such a slow start off of these lows, 1 into the 61.8. I'll zoom in a minute so you can see clearer. 2, 3 up to the median line, right? That would be really, really typical. 80% probability of hitting the median line off of this pivot. So you get an 80% chance to hit the median line, you get a move back and forth, maybe a blow off move for a 5th wave, or maybe back to the median line. Alright, and then we've gone 1, 2, 3. It could be way more aggressive than that if it's correct. So let's just come in and see how this is looking so far. So, do we have relationships based off of this pivot prior to the placement of the pitchfork? Well, I'd argue yes. We'd have to count this as an ending diagonal, like in our alternate count. But yes, we do. We've got some resistance here. We've got some support here. We've got some support here. We've got some support here. Okay. Nothing in the transition of the pivot, really snagging around the 61.8 a little bit here, but nothing that would scream at me. However, the move up off the low, we had a bump into the golden ratio, bump into the golden ratio, bump into the golden ratio again, fall out of the pitchfork. This is not particularly convincing, but what would sway me, or start to sway me in favour of this idea, would be an immaculate test of a median line here. If we got that, we'd have to be over 100k to get that, but if we got that and then a big pullback, I'd start thinking, bloody hell, this might be right. Okay, so we're still a long way off of it, and it is still pie in the sky moon boy talk at the minute, and I don't want you taking it too seriously. We've already got an incredibly bullish count anyway in our primary count. We've got another bullish count in our alternate, and we've got the bearish case to think about in case things reverse. So let's leave the Elliott wave there for the minute now. Turn off this uber bullish macro count, and we're just going to come in now and look at the basic technical analysis. So we're going to bring up our, and why is this down here? And where's my MACD gone? Alright, I don't know what's happened there. Let's bring it back up. Oh, you are joking. It has reset my settings. Now, why on earth has it done that? I must have, at some point, guys, deleted the MACD by mistake, and it didn't save the settings I would expect. So I'm just going to have to rejig this while you're with me, okay? Sorry about that. It's just going to take a couple of minutes, and I will save this as default. I've done it several times, and for some reason, I don't know why, it just goes a little squiff sometimes. There's a darker green. That's right. Growing in bright red. Falling in... No, wrong way round. Lighter red and darker red. Is that right? That's right. Yeah, that's it. Okay, there we go. Actually, no, let's save that as defaults before I move on. Save as default. Okay, so, right, let's get on with it now, because I've been going on forever. Okay, bring up our exponential moving averages. We've got the... Need to switch another couple on. I've obviously been dossing about with the chart, and haven't reset everything as I intended to leave it. There we go, we've got our 10 in yellow, 20 in blue, 60 in orange, 250 in green. We're on the weekly time frame. We got our RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We have our MACD also with a 10 for the average, a 20 for the signal in blue and orange respectively, with our green and red histogram here to help us record momentum. So, weekly time frame. I'll just discuss a few ideas as we observe this. So, going back to the Uber Bull idea just for a moment, we got a test of the 250, a big break of it here. This is wave degree 1-2 we were talking about. Now here, we got a very shallow 4 in comparison. So maybe with the alternation, shorter in time, longer in time, okay, alternation in form, alternation in depth. So the argument that this is still 3-4 is still very sound, and that's the one that we're working off in our primary count. Now we came back to the 60 exponential moving average here, would not body a candle below it on the weekly time frame, wicked through it a few times, but this proved to be major support. Since then, let's come in and have a look, slightly closer look. Since then we've moved up off of the 60, through the 10, through the 20, dragged the 10 back through the 20, come down into the 20 and below, and thrusted higher still. We can see the completion of this long period of bearish momentum and the crossover of the average over the signal and the return to bullish momentum, but we've still got our highest readings, for the meantime, highest readings of the RSI and the MACD around our peak. Now, that fits the idea that we're working with a wave 3. We would expect to see momentum peak. Now, in the case, and I think I pointed this out before, in the case of the RSI, it peaks in what we assume to be the 3 of the 3, because we've got this expansive move, right? Sorry, this is 3, 4, this is 5, this is the expansive move here. So this is the 3 of the 3, this little pivot here in the RSI, whereas the MACD peaks out at the actual 3 here. So 3 of the 3 for the RSI, 3 for the MACD. Not always a pattern, not always going to play out that way, but, you know, quite common. So we've seen what we suspect is a 3 into a 4, and now we're pushing higher. Let's come down to the daily time frame. Have a look at this. Alter the chart. Come off of log in the shorter time frame here. Okay, so a thrust down below the 250 on the daily time frame, and for our primary pivot, and this is the reason why, rather than considering this a 3-4 as my primary, this is why one of the things which makes me lean into this being a 1-2 is it's a perfect test on the daily time frame of the 250 exponential moving average. Wick 2, wick 2, wick 2, 1 wick through, nobody below. This was major support, and we know this coincides with a 50% retracement of this move up, so this is the perfect place for a 2, and that's why I favoured it as a 2 the whole time, and we'll continue to do so for as long as these lows hold. I pointed that out. Alright, so what have we got here in the RSI? Some pretty bullish momentum, you know, some pretty impressive and aggressive move here. Let's just have a look at this high. So it comes back roughly to the high back here. We had this huge divergence here all the way down. Market was weakening through January, February, and then we had that flush down. So we saw that divergence beforehand. We've broken that downward trend, come back up to the upside. We've done a round trip from overbought to oversold, overbought to oversold. So corrective pivot, that's what we're saying. So impulsive move into a pivot, corrective round trip, as I like to call it. So that's been done, so that looks pretty good. We did come up into overbought territory, so cooling off in the short term makes sense, maybe pulling back, breaking that short term trend, but you know, Bitcoin can stay overbought for a bloody long time, and if we're just getting started in a 3, we might not pull back that far, we might keep going. Okay, and the MACD is looking more convincing than the RSI that this is impulsive off of the low. Okay, because let's just take the same approach again. We got this warning of a high, divergent high. This is March, this is February to March, flush down in the correction, way below the zero bound. And then we've got this first move up into what we're saying is a 1, a flush back down below the zero bound, and now really impressive boost in momentum back up higher. So looking at where this has come off, in terms of the peak of these histograms we're dealing with here. Let's just pick out the top. We can see that the peak of the current bullish momentum here recorded in the histogram is higher than the final move up into the previous wave, and it's much more significant than all of the bullish counter trend moves during the correction. This is corrective. This is the first impulsive move off of the low, this is the next, and this is the third, and momentum is continuing to pick up back above the zero bound. So I like the look of that. This looks like a big ass correction. This looks like the beginning of an impulsive move. Okay, now we don't do Elliott wave on the MACD, but we do like to see it support price action, and I would argue it definitely is currently. Okay then, so I think that's all our basic technical analysis. The only thing I would point out, the only caveat to all of this bullish talk, and we've already discussed the bearish option, but the only caveat I would like to frame it with is, and I have to use a different exchange for this because Bitstamp is a bitch for not recording volume accurately. You know, I am, as you can see with this count here, slowly over time shifting my entire count over to a couple of different exchanges. I've even used combinations of exchanges to try and get rid of all the volatility spikes, but it's taking me a while because I've got so much work I have to do on a daily basis. But getting to the point, volume on the weekly, let's have a look. Also this chart. Okay, we've seen, actually the day chart's going to work better for this. So let's just have a quick retrace, a rethink of the bullish trends we've seen prior to this correction. This is the only thing I think helps support the bearish case, that we are not done in this correction. That is the only thing I think that is leaning into it. Is we have a spike into this one in the volume here, we drop off during this correction, but as we come up into the 3, the 4 and the 5 of this one, we can see volume increases to support it. We then have this period of corrective activity, climax of selling in the volume here at the low. Now this move, I will say this, move into the 1, we have the spikes during the waves, but we have a general decline into the wave 1. So you can have declining volume in a wave 1, and we're saying this is a wave 1 of minor degree as well. So perhaps the bearish case is saying, oh well, it's not supported by volume, so it's bearish. Well, this wasn't supported by volume, and it turned out to be bloody bullish, so it's not always the case. I will point out, however, that once we clear this 2 pivot, we get a huge boost in volume through the 3 in our primary count. This is the more bullish one. I'll tell you what I'll do, I'll package this before I forget, so we can just switch it off. This is not our primary count, remember, this is a different chart I've been working on. We're saying 3, 4, big support here, and then we get big thrust down, climax is selling here, and now we've had declining volume again during this move. I would be so much more confident in the bullish case, and I'm already pretty confident, but I'd be so much more confident if I saw volume going up to support this. But as we pointed out here, with this initial move, you can have declining volume while moving up in the wave 1. Alright, so nothing is certain, nothing is for certain. Okay then, we'll leave it there guys, that's everything I wanted to touch on. I don't think I've forgotten anything. If I have, let me know in the comment section below. Right, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, and as always, thank you very much to my Patreon subscribers. We're coming towards the end of the month now, so if you are interested in joining the Patreon, I would suggest waiting to the start of November now, preferably the 2nd, to avoid the potential of Patreon double charging you based on time zones. But I always advise starting at the start of the month, because I will charge you the day you sign up, and then only once each start of each month after that. You will not get double charged again. But if you were to sign up on the 29th of a month and then sign up on the 1st, you would be charged twice. So I try to give people maximum value and warn them of that. So better to start at the start of a month and get maximum value. Alright then guys, thank you for joining me on this video, and thank you for putting up with me going on for the best part of over half an hour. And that's probably going to be me done for the weekend now, so have a good one, and I'll see you next week. Take care.